Welcome to the Chrisman Commentary Daily Mortgage News Podcast. I'm your host, Robbie Chrisman. Topics on today's episode include headlines from around the industry in 60 seconds or more, my interview with ThoughtFocus Build's Bradley Clerkin on AI scalability in the mortgage industry, highlighting the shift from basic AI functions to Agentic AI with background workers, and what to look forward to from Fed Chair Powell's speech in Jackson Hole today. Thanks, First Close, for sponsoring this week's podcast. First Close provides fintech solutions to HELOC and mortgage lenders nationwide, increases profitability, and reduces costs for mortgage lenders through systems and relationships that enable lenders to assist borrowers more effectively and ultimately shorten closing times. To learn more, visit firstclose.ai. A few years back, someone told me two lenders merging in this environment is like two drunks outside a bar holding each other up. That isn't quite the case anymore for various reasons. And we're always just one big announcement away from yet another blockbuster strategic deal. Right? Not the least of which is certain companies are expanding while talented individuals are looking. In headline news, CWDL's mortgage, Arizona government, and tax teams are now part of GREET Professionals Alliance, a fast-growing network of accounting firms. As part of this evolution, CWDL is now rebranding its practice under a new name, Advocent. And switching gears to the litigation side of things, a federal judge in California denied class certification in a lawsuit accusing a majority bank of racially discriminatory mortgage lending, a decision that significantly limits the scope for class-based fair lending claims. The plaintiffs, comprising Black and Hispanic mortgage applicants, alleged violations of the Fair Housing Act and Equal Credit Opportunity Act, claiming they faced higher denial rates, delays, and costs compared to white applicants. However, the court found no evidence of a uniform discriminatory policy, emphasizing that individual lending decisions involved numerous factors and human discretion, and that the plaintiff's statistical evidence failed to establish a causal link to racial bias. And for all the talk of cutting rates by politicians and in the media, September rate cut expectations continued to slip ahead of today's start of the annual Jackson Hole Economic Symposium. Keep in mind that since the FOMC began cuts, starting last September 18th for 100 basis points in total, 30-year conventional, VA, and FHA lending rates are 52, 78, and 48 basis points higher, respectively. The market-implied odds of a September rate cut may have slipped to around 80% from a near certainty last week. However, the front end of the yield curve is at risk of a bearish correction if Powell doesn't deliver on the degree of dovishness that the market is currently anticipating. For a Fed that has gone to painstaking lengths to telegraph its moves in advance, there's a great deal of uncertainty surrounding the tone and content of Powell's speech. Pre-committing to any future course of action would be uncharacteristic for a Fed in data-dependent mode, especially given that August's CPI and NFP reports have yet to hit the tape. And for those still discussing the release of the July FOMC minutes, which showed that a majority of the committee felt that the risk of inflation outweighed the risk of a weakening labor market, keep in mind that meeting was held prior to the weaker-than-expected August employment report, which included some significant downward revisions to previous month's readings. Pricing in Fed funds futures markets is implying around a 75% chance that the Fed cuts rates by 25 basis points in September. For today's interview, I wanted to welcome to the show ThoughtFocus Build's Bradley Clerkin to discuss AI scalability in the mortgage industry, highlighting the shift from basic AI functions to agentic AI with background workers. He's Director of Technology Innovations at ThoughtFocus and likes to emphasize the simplicity and intuition behind the decision to integrate AI agents into business processes.
I did look up ThoughtFocus Build. It's about this agentic AI movement to a large degree, which is going to hopefully revolutionize the mortgage industry with all these background workers that will make people more productive. You know, you can be freed up to focus more on your relationship with your clients if you're an originator and that sort of thing. But that might be a good place to start, kind of a background of ThoughtFocus Build, where you tie in and how it all kind of fits into the mortgage industry.
Yeah, sure. So ThoughtFocus Build was, something we really had to do. ThoughtFocus proper is 21 years old, which in AI space is about 2,000 years old, right? So the kind of formal company itself has large group of operational staff, think BPO, global BPO, doing all sorts of processes for mortgage, and then a whole engineering group, right, who builds all sorts of kind of custom software and other things, in the same industry. And we were super fortunate. At the time, we didn't feel so fortunate. We were actually working for, in addition to, kind of mortgage industry, working for banking and insurance. And basically at the same time AI came, kind of everyone learned about AI. We were in a similar boat, focusing on machine learning in the context of like reporting and analytics and these kind of things. But Silicon Valley Bank happened. And so I had a lot of regional bank customers, and they said, hey, we really love your services, but, we feel like the entire world is coming down on top of us, and we can't, we're just going to pause all work. And so I had a wonderful bench of very qualified engineers who I said, and I still keep it on my desk. So this is why I bring it up. If you see, we'll probably get it. It's not that we've copied it in any way or there's any trademark infringement, but we asked for our developers to create Wall-E for some task that they do, and they're able to quickly figure out that we can build these new software robots that now become now the famous term is agents. So Gartner blessed us with that term, which I think is more confusing than anything, but it's what's stuck. So we're talking AI agents nowadays, but at the time we thought about it as a software robots, right? That could basically take on directives that you give these software robots, and they could come up with their own plan for how to achieve those things. And that was so radically different than how we built software in the past, where, I mean, I'm sure some of my software engineers would argue with me, but, basically they were a big translation engine, right? The software engineers were, where they were looking to take workflows and processes and put them into strict, kind of if-then statements and logic, and hopefully a CPU could execute it. And hopefully they got all that stuff right so that when it actually gets to the ground level process, the workflow works. And I think all of us know that that never really happened. And hence why, underwriting, for example, is described as this like giant conveyor belt where we just keep, taking things off and putting them back on. And the even with all the software we have, it's never been automated. So because we were quick to figure out that, 3 years ago in the AI space is a long time ago, we were able to figure out that this is the thing that everyone's going to build. And we happened to get a customer right away who was willing to invest a lot in kind of highly regulated space, not the mortgage space right away, but this was in background check space. So you can read about some of our work in the background check space. But they said, hey, we'll take it, build these robots for us. We don't want to have humans doing background checks anymore for the most part. And that really led us to have this ability to know it works, right? And I think that kind of radical belief kind of frees you up a little bit, right? Because so much of the last few cycles of technology innovation has been heavily, immersed in kind of vaporware, right? Like, I know it's supposed to work, but I've never actually done it. And so we had the ability to know that. And so with that, we thought we were going to have a line out the door of folks like saying, okay, automate my processes, the ROI is there. But turns out no one earmarked any money to do this. And still to this day, I don't think they've really earmarked any money to do a lot of these things. And so we had to really figure out how to solve it, right? Because we knew we had gold to a certain extent, but no one is buying. And even if I could show you every demo, even if I could do every prototype, right? We would get to, step 2 after prototype and say, we just can't get the budgetary mechanisms to do it. And so that's when we decided, like, okay, we've got to radically rethink this. How can we create basically a specific specialized unit within our company that not only obviously has the technology chops, but also can implement new kind of nimble contracts that allow our customers to do this at little to no cost to them. So we sat down with our investment partners. We're backed by some pretty reasonably sized private equity backers, and said, okay, let's figure out how to get customers to be able to adopt these AI workers at scale at no cost to them, right? And that's really what where Build was formed, right? And so we've now evolved that over a few years now to have a number of different contract vehicles that allow us to come in, and the way we look at it is we are underwriting AI savings. So instead of pitching you the normal, like, hey, give me a year to build this, all the normal kind of engineering, scoping, et cetera, we look at it more as truly a contract and a business challenge to say, okay, can we guarantee the outcomes? Can we share in those outcomes somehow? And can we do this at little to no upfront cost, right? So our most popular kind of thing that folks talk to us about is where we use, for example, labor arbitrage to self-fund the development of AI. So I might go in and look at a process of folks, maybe it's like 100 people doing, one, for example, let's say they're getting bulk mortgages in, right? And they're taking the tape and they're going through all those documents and trying to figure out, like, is the tape accurate? Are we buying the right thing? Et cetera. That can be, hundreds, might even, for some companies that might even be an underestimate. But let's just assume for this conversation, hundreds of folks that we've seen doing this. I'll tell them, okay, you let me do that process. I'll do it for you. I'll do it cheaper because I can offshore it. But then I'm going to cannibalize my own business. I am literally going to take that labor arbitrage that we've created, and I'm going to directly guarantee reinvest that into AI, and I'm going to cannibalize my own business and build out AI workers that do that same, exact process, but they'll probably do it more accurately, 24/7. All the kind of dystopian, realities that we're all living under right now. And then at the end of the contract, I'll give you the IP back. So I don't even want the IP; you can have it. Now we size the contracts in a way where we can make some reasonable amount of money on it, but everyone benefits, right? And we contractually guarantee the benefits. So if you look in and that team we think could be automated, let's say to 95%, we'll labor arbitrage maybe to 40%, and then we'll guarantee all the way up to like 80%, right? So we'll tell you, we know that process can be automated to 80%. I'll contractually guarantee that it'll happen, and I'll show you the glide path to get there. I'll start at 5%, 10%, 25%, et cetera, on given dates. So that's really created this kind of driver in specifically. I mean, obviously everyone wants to talk in the mortgage industry because no one has the ability right now to earmark those funds to do this stuff. And so there's a lot of processes that we can use our 20 years in BPO to create labor arbitrage, and then Build comes in, builds the AI workers, then helps that transition happen, if that makes sense.
It does make sense. I want to talk about the evolution of AI for the industry, because it's been around for a while, not 20 years like you mentioned with your company, but in terms of the industry, maybe things people didn't realize were being automated or assigned to AI or machine learning had been, in terms of some of the stare and compare stuff or whatever it might be. We've now shifted from kind of basic AI functions to increase productivity into this agentic realm where there's background workers and that sort of thing. And sure, maybe to a large degree, we put the cart before the horse in terms of saying all this can be done. Well, sure, all of it can be done, but maybe no one's doing it. So and then we move to the next greatest thing before anybody even gets to the previous step. We're at agentic AI before people have even figured out some of the productivity stuff. And so I want to ask you where the progression leads from here. And sure, the proper question might have been how we get better adoption for agentic. I'll get back to that in a second. But if we go from kind of rudimentary AI use cases in the industry to now agentic background workers and those sorts of things, how does this continue to evolve, and where do you see it heading from here?
Yeah. Well, I think one thing that I'm a strong believer in is that there's a convergence happening on the actual software engineering side. So there just changes everywhere, right? It's hard to even keep up. Is one of the things we're not saying, but we all know, right? It's like you have to be a psychopath, it feels like, to keep up with all the headlines and all the changes and all the industry shifts in every segment, right? Because of this thing. But we are, in the software development space, that whole space is being disrupted by AI writing code, right? And, if you spend enough time online, you'll get a confusing amount of opinions on this. In the same way that we, kind of were able to develop radical belief that, AI agents are real because we did it. Same thing on the software side. We have teams who over 80% of the code that's written is written by AI, right? So you have this ability to speed up software development. You have to make an investment, just pulling stuff off the shelf and, using stuff that I've heard like Claude Code is one of the big agentic ones, or Cursor is another one that helps these developers write code really fast. You just pull it off the shelf and use it. It'll feel really good for a few weeks until it, does something terrible. And so you have to really invest in reimagining your software development and your product development life cycles with an AI first mindset. And so that's what's happening right now in the software development space. And I believe that will lead to us having the exact same conversation on our core systems. So, I'm also a realist, right? And, working in the banking industry, for example, we're still dealing with, Jack Henry mainframes and stuff like that. So, how long have we said that the mainframe is going to end? Right on to the next thing, as you would say, mainframe's dead, on to cloud or whatever. And yet it still lives on. So I think I'm a realist about a lot of our kind of core systems that run, obviously in the mortgage industry, there's just a few giants, right, that run a lot of our LOSs, et cetera. Those aren't going to, right? We're not suddenly going to build AI robots that replace them all. But instead, those companies are going to be forced to really create AI first interfaces, right? And I think that that's a big shift we're going to start to see. Is we've seen it a little bit. Again, if you spend way too much time online, you'll have heard of this confusing acronym called MCP, which stands for Model Context Protocol. And it's kind of like the early days of how do we build systems that are built for AI workers, right? So today I can take a lot of processes and automate them with AI workers, but I have to do a lot of, it's not duct tape and bubble gum, like they're solid engineered solutions, but it's not exactly like straightforward sometimes in terms of the way that we integrate it into our existing software and mechanisms, and that needs to change, right? So I think a lot of those providers we're going to see over the next few years, and really I think we can only talk a few years because no one really knows at this point what the labs are going to come out with next or what all this truly means. But I think that'll be the big initiative that's going to start, that's going to help us accelerate this even further, which is any of our current kind of core systems, whether it's mortgage or banking or insurance, they're going to be coming out with AI worker, AI agent first interfaces that are built for these workers to dynamically use the systems in the same way that we spent how long with UX, UI folks to build out systems for humans that were, ideal. I think we'll do the same, in that space. And then the other thing that I think is going to keep happening is smaller models, more purpose-built models that are lower cost, right? Because the other kind of thing that most folks don't have experience with is, when you do the math on some of this stuff, the newest models are quite expensive to run, and you really get down to the ones and zeros, sometimes it's not the huge savings that you would think it would be if you're using the biggest, most expensive models. And so when we were in this situation, we first built some of our first agents where we were using some of the first models, like this was like 4 Turbo, was actually quite pricey. And it wasn't until 4.0 Mini came out, this is from OpenAI, that a lot of these kind of cost plays opened up, right? Where we went from like dollar for dollar kind of match, which was still good because you were highly accurate. You worked 24/7. So there was ways to justify it. And now we're at pennies on the dollar, right? And I think as these models get smaller and cheaper and more purpose-built, the cost equations are going to go further. So to me, those are the two big areas that I think, actually are going to be focused on, not, too much hype around it, if that makes sense.
Mm-hmm. And you mentioned earlier in this call, automate my process. The ROI is there. Even if companies kind of realize that, they never actually got to the point of fully following through on it, of like, yeah, I see the ROI is there, go ahead and automate my process. How do we get from where we are today to companies actually following through and saying, here's the green light, hit the go button, let's do it, I'm in?
Yeah. Well, I mean, two things. It's not even just the go button. It's like the multiple go buttons, right? So I already kind of talked about, the challenge of funding. I mean, I will say, like, if whether you engage with someone like me or, just ask AI and work through it kind of thing, right? If you do the like rudimentary math, right, of like, okay, let me do let's say I'm going to do like a functional decomposition of the work and a workflow, just like I would do with, RPA projects of the past. And then I'm going to, do some math in terms of how much data I'm processing, how long the AI worker is going to run, just like you know, the actual like hard math that you need to do to figure out the dollar amount. You will get a net positive ROI in most situations. Technical feasibility is usually there. There's only like a few outliers where it currently isn't in most of these processes that we do today, which is also maybe just a total tangent here. It's also why the whole conversation about are we at AGI or not, or this whole thing is kind of a moot point for folks like us, because the reality, the models today is like they're good enough to do most of the work that we do. So like, they're going to get better, they're going to get cheaper. That'll be great. They're already good enough. So you can do all that equation, and that will like, if you bring it to the business, they'll say, okay, that's pretty good. But what's going to be associated with it is still all the normal risk that's associated with any change project, right? And I think that that's actually what's holding folks off the most. I think anything about like regulatory and compliance, like there's a little bit of that solvable, right? You can just, usually the response that we give is, hey, last, not even the last mile, the last like 10 feet can be human driven, right? You can build a really good human in the loop interface. That human in the loop interface can make sure that, the human is actually reading the output that you've given it and confirming whatever the processes you're doing is checked by human, which covers off on most of your regulatory stuff in terms of, AI is not doing the whole thing. It's not making the end decision. We're bringing humans. So most of the compliance stuff, most of the cost stuff, you can navigate through when you're presenting this to your business. The actual biggest impediment is kind of having not just the courage, but you don't like a company doesn't have the muscle memory for this change, right? And the change is transitioning from human work to AI work, right? And so to me, when I talk to executives, they understand this. I was kind of surprised. They all understand, like, I know I could build that. I know it'll probably work. I know it probably has a cost ROI, but I'm really concerned that we get that out and I don't have basically the fortitude to like make the change, right? And they know this, right? Because like they've seen it in other times in their life cycle. So there is a bit of like, that's the one duck you have to get into a row, right? Whether it's meeting with HR, meeting with like, we are going to have to make a people transition here. And we tend not to shy away from it, right? Like a lot of folks are going to have to find, different work. Sometimes there's work at the company, some it's a different company. But if you don't have that in line, all the ROI, all of the stuff we've lined up doesn't come to reality. We've been on projects like that. The other piece too is don't go for the low-hanging fruit. That's the other thing here, because that'll also get you to stop. So you have to tie it to resource efficiency, and if you don't, the ROI doesn't make sense. So don't start with low-hanging fruit because you won't get off the ground because the ROI can just be kind of like crumpled up in a second. This is making sense. And then once you do find the right use cases, and the only way to really find those right now is either with you have a huge growth potential, right? So I had to triple this team size anyways, so now I'm going to use AI to do that, or I found some efficiency in the human side. And then it's aligning our change partners, whether it's in HR, resourcing, management, to do that. Obviously, that's the other reason that a lot of people talk to us. We're like, that's in our muscle memory, right? We stop projects all day long. We have new customers, we onboard, we offboard. It's who we are, right, as a services provider. So that's something we do all the time, right? It's easy for us to kind of execute those processes without a lot of resistance.
This feels like part one of a longer conversation.
Yeah, sorry, Robbie. The one thing
you're good. You're good, man.
I'm warning on is I talk too much.
No. There's a bunch more questions I want to ask you. So let's plan on having you back on the podcast. I really enjoyed this, though. Thank you.
Yeah, no, Robbie. Thanks. Thanks for doing this.
Yesterday's economic calendar was the busiest of the week, but the information did not trigger a meaningful shift in the macro narrative. Probably because data released was a mixed bag. The weekly initial claims report, in at 235,000 during this non-farm payroll survey week, and the Philadelphia Fed survey, which came in down 0.3, disappointed, while flash manufacturing, PMI showed a return to growth, and services PMI remained in expansionary territory. The market's sensitivity to second-tier employment data has increased, both due to the accuracy of the official BLS data coming into question and growing concerns about the health of the employment market. Both PMI reports showed a sharp increase in input prices, which was attributed to tariffs. The mixed set of economic reports was countered by comments from two Fed officials who pushed back against the case for a September rate cut. Today's calendar is limited to Fed speakers, including Fed Chair Powell's much-anticipated speech at the Kansas City Fed's Jackson Hole Economic Symposium, which is titled Labor Markets in Transition, Demographics, Productivity, and Macroeconomic Policy. According to the Fed's website, Powell's speech is titled Economic Outlook and Framework Review, where the latter could potentially be more newsworthy. Boston's Collins is also on the calendar and scheduled to speak. With no data on today's schedule, we begin Friday with agency MBS prices roughly unchanged from yesterday's close, the 2-year yielding 3.80% and the 10-year yielding 4.32% after closing yesterday at 4.33%. Let's wrap up with a joke and some housekeeping. A man recently moved and was filling out forms at his local police station. He was asked if his driver's license had ever been suspended or revoked. "No, never," he said. "Have you ever been convicted of a DUI?" "Oh, yes, lots of times." "Have you ever been convicted of a driving-related felony?" "Yeah, 3 of them." At this point, the officer stopped to ask, "Well, wait a minute. If you have all these DUIs and felonies, how come your license has never been suspended or revoked?" The man responds, "I never got one." Thanks, First Close, for sponsoring this week's podcast. First Close provides fintech solutions to HELOC and mortgage lenders nationwide, increases profitability, and reduces costs for mortgage lenders through systems and relationships that enable lenders to assist borrowers more effectively and ultimately shorten closing times. To learn more, visit firstclose.ai.